So as London's housing prices have continued to rise, I've been getting more and more calls lately asking me how much do you need to make to be able to buy a house in London. Lstar noted that in February, the average selling price in London was nearly $610,000. Now, not all prices are that much, but it's definitely a jump from what people are used to. So I ran some calculations just to give you sort of an idea of how much you actually need to make in a household income to be able to purchase a house in London right now. Lstar, the London and St. Thomas Association of Realtors, actually separates their pricing data between the East End, the South End, and the North End of London, showing the various house prices for each area. Starting in the East End, we see that the average house price was $457,000 in February of 2021. So the average mortgage payment in the East End, using a qualifying rate of 4.79, which is the Bank of Canada rate with 5% down, we would be looking at about $860, $870 biweekly to buy a house in the East End of London. To qualify for one of the houses in the East End of town with the average selling price of a little over $450K, we'd be looking at a minimum household income of between $95,000 and $105,000. If we had to incorporate other debts such as auto loans, credit cards, furniture loans, anything like that, then that amount would be lower. So all these numbers are based off having zero debt. The South End of London was quite a bit higher average price of $652,000. Again, using a qualifying rate of 4.79 over a 25-year amortization, we'd be looking at a mortgage payment a little over $1,200 biweekly. That's principal and interest amortized over 25 years. So what would you need to qualify for one of these houses in the South End? Well, with an average selling price of $652K, you would need an average household income of between $135,000 and $150,000 per year. Again, that is with zero debt. Now on to the North End. The average selling price in the North End of London was $710,000 in the month of February. Based off an interest rate of 1.83 on an insured loan, less than 20% down, we'd be looking at $1,323 biweekly based off a 5-year term and a 25-year amortization period. So the loan's paid off after 25 years. And as for qualification standards, again, using the 4.79 interest rate in the North End, you would need a household income of between $160,000 and $170,000. It's important to note as well that all of these numbers are for single-family detached homes. It's a whole different story when we're talking about condos. When you're trying to get a mortgage on a condo, we have to incorporate for condo fees as well. So the standard practice is to incorporate 50% of the condo fees. So if the condo fees were $400, then we have to use $200 of that in the monthly debt ratios. With doing that, the actual purchasing power does drop down, sometimes fairly significantly. So the question is, so what? You don't have to be a genius to say it's more expensive to buy a house in London. But not only is it more expensive, the qualifying standards are getting more and more difficult for people trying to afford a house. Can we expect any changes in the future from the government or from the Bank of Canada? Maybe. If we do, any changes will most likely be to the qualifying rate of 4.79, which was the stress test introduced a few years ago. There has been some talk about them raising the stress test to make it more difficult for people to buy more expensive homes. So while that may help slow the rise in house prices, it will also make it more difficult to afford the houses that are out there, as you'll need a higher income to be able to afford the same amount. So what's this mean for you? Best thing you can do is get your pre-approvals in line. Get something written on paper, and you want to make sure that it's been actually underwritten and that somebody has looked over your paperwork. I'm going to be doing a video on everything that you will need. We'll go over your T4s, your pay stubs, your letter of employment, everything that you're going to want to have handy the minute you decide to shop for a house. Once those documents have been looked at, you know that you've actually been qualified for a mortgage rather than just a computer spitting out a result based on your credit score and the income that you've inputted. Always have someone look over your documents. If you like this video, please click like and subscribe, and you'll receive further updates as the 2021 market continues, and we'll see what happens.